Would you like to know about a company that increased its dividends year after year over the last 21 years like this? They grew their book value at a CAGR of 21% over the last 10 years. And the best part is, currently they're trading below their book value, and it's fairly undervalued. Welcome to Bank OZK. It used to be called Bank of the Ozarks, and last year it's changed its name to Bank OZK. Today we are going to analyze this company. Before we get in, the mandatory disclaimer, please note that this is not a recommendation. This is purely for education purpose. We came across this business, found it interesting, so just decided to make a video to discuss it with you guys. So please do your due diligence. Bank of the Ozarks was founded in 1903 as a small community bank in Jasper, Arkansas. They added a second bank in 1937. In 1979, George Gleason, a 25-year-old attorney, purchased the controlling interest and assumed active management of the bank as chairman of the board and their CEO. From the beginning of his tenure, Mr. Gleason instilled a personal commitment to excellence, fair dealing, and exceptional customer service. These priorities have become the cornerstones of the bank's character, even as they have grown to over 250 offices in 10 different states across the United States. In July 2018, the new name Bank OZK became official. Quoting from their annual report, "Our new name reflects both our heritage and dedication to building community and digital experiences to help you meet your financial needs. We take great pride in knowing you, our customers. We understand that these relationships, along with our expertise, are the best ways to discover just the right financial solutions to suit your needs. Our purpose is not to be the biggest bank, but to simply be the best one." Now, one of the criteria for a good business is that it should be very easy to understand. And this is exactly what Bank OZK is. It is that very simple banking operation where they collect deposits from the depositors and pay them an interest, and then they lend out the funds at a higher interest. The difference between the interest they receive and the interest they pay is their core spread. They have a very simple balance sheet, and this is unlike many of the big banks whose balance sheets are extremely opaque. OZK does not carry any complex derivatives exposures and have extremely high standards for their loan approvals. This picture shows how their net income grew over the last 22 years. Now, whenever I come across a picture like this, I tell myself, I wish I had been an investor in 1997. But the good news is, when you find a business which is a steady compounder, it's never too late. Even if someone invests in this business, assuming that it's available at a reasonable valuation, even if someone invests in it today, a decade or two later, looking back, we would have the same great feeling for being able to identify and take advantage of this beautiful compounder. OZK has grown its tangible book value by a CAGR of over 21% over the last 10 years. And the best part is, they have increased their cash dividend in each of the recent 36 quarters and every year since their IPO in 1997, that is over the last 22 years. Their payout ratio has been fairly stable at around 25%, and they have done really well for their owners. OZK has been consistently rated as the #1 bank in the US by various leading publications and magazines. Here is a list of all the publications which have awarded them the top performing bank status since 2011. Now, in 1979, when George Gleason took over the bank, it had total assets of $28 million. And they have come a long way in 40 years to grow their assets to $23 billion. They have 254 offices, out of which 242 are deposit gathering branches, and there are 12 loan production offices, and they are spread over 10 different states. And this is as of end of July 2019. They have had very strong organic growth, and they also have made 15 different acquisitions. But in spite of having so many acquisitions, their purchased loans, which is basically the loans they acquired from the banks which they acquired, that accounted for only 10% of the total loans as of end of June 2019. This picture shows the breakup of the different business segments. And as we can see, over the last 3 years, the real estate segment, which is RESG, the contribution from that has gone down from 70% to below 60%. And they very actively are trying to grow the other segments. So the 4 main segments are RESG, which is the Real Estate Specialties Group. It has long been the primary contributor to OZK's non-purchase loan growth, and it will continue to be their largest single contributor to their non-purchase loan growth in the future years. The community banking loans include consumer and small business loans. The community bank originated commercial real estate loans and loan originated by the home builder finance, affordable housing, agriculture, poultry, government guaranteed, and business aviation loan teams. The indirect RV and marine lending team has become an important contributor to OZK's non-real estate loan growth and was the largest contributor to the loan growth in the last couple of years. The nucleus of this team, they joined OZK in July 2016 as part of an acquisition. And the CLSG stands for Corporate Loan Specialties Group. So these are basically the 4 different segments which contribute to their various loans. One of the biggest differentiators between OZK and any other traditional bank is their process for loan approval. Gleason has repeatedly said in their earnings call that there is no incentive for a loan officer to approve a loan just because he does not receive a bonus based on the number of loans that he or she approves. The loans are approved purely based on their internal approval criteria, and they're very, very stringent. And that's reflected by their very healthy net charge-off ratios. As we can see from this picture, that the asset quality has been consistently better than the industry average over the long term. In 22 years of operating as a public company, the average net charge-off ratio has been approximately 1/3 of the industry's net charge-off ratio. So this blue line here is the average charge-off ratio for all the FDIC insured institutions, and the red histogram belongs to Bank OZK. We can see how much better they are. And Bank OZK also scores significantly better than the other FDIC insured institutions in terms of its efficiency ratio. Now, a bank efficiency ratio is the measure of a bank's overheads as a percentage of its revenue. So the efficiency ratio is equal to all expenses over revenue, and this does not include the interest expense. So let's take an example. Let's say a bank's total expenses, excluding its interest expense, is $5 million and it earns revenues of $10 million. Then using the formula which I just mentioned, we can calculate the bank's efficiency ratio as 5 million over 10 million, which is 50%. This means that it costs the bank 50 cents to generate $1 of revenue. Now, these expenses include salaries, rent, and other general and administrative expenses. The interest expenses are excluded because they are investing decisions and not operational decisions. So why does efficiency ratio matter? Because the bank's efficiency ratio is a quick and easy measure of a bank's ability to turn resources into revenue. So we can see that OZK's efficiency ratio has ranked in the top decile of the industry and has been consistently below the 40% mark. Now, in 2015, in anticipation of crossing 10 billion of total assets and in preparation for the day when they'll cross 20 billion in total assets, they added about 250 talented team members. And that has pushed up the efficiency ratio a bit, but it's still way below the industry standards. OZK also rates very high with respect to the net interest margin, and that has also been within the top decile in the industry for 8 straight years. So just to explain what net interest margin means, it's basically the difference between the interest and investment income and the interest expenses expressed as a percentage of the average earning assets. So the net interest margin is equal to the interest income minus interest expenses. That's basically the spread that the bank is making divided by the average earning assets. And we can see that in the early 2019, the net interest margin of OZK has been about 111 basis points better than the industry average. Now, despite the significant migration in the mix of OZK's purchased and non-purchased loans and the larger volume and more defensive posture of their securities portfolio, the net interest margin was still in the top decile for 2018 and the first quarter of 2019. So this is a very healthy situation to be in. Now, OZK also has been maintaining very high returns of capital. Their return on asset has been consistently above 2%, which is very, very healthy, and that is significantly above the return on assets of the other FDIC insured institutions. And their return on equity has been consistently between 12 to 20% over the last 10 years. Even their return on tangible equity has been fairly healthy, and it has ranged between 11.5 to 20% over the last 10 years. Now, here is a list of America's best banks in 2019 published by Forbes, and I'm really sorry about the small print, but I could not get a better picture of this. Now, we can see that most of the top banks have very high return on tangible equity, and OZK ranks right in the middle with about 16.2%. But it also depends on the leverage used. And based on Tier 1 capital ratio, the top 25 banks mostly have fairly good conservative ratios in 11.5 to 14% range. And here, OZK has about 12.2% of Tier 1 capital ratio, which is a fairly conservative place to be in. Now, unfortunately, Forbes doesn't list the raw ROA figures. Otherwise, we would have seen that OZK ranks very high on that. Of the top 100 banks, only 3 has efficiency ratios in the 30 to 40% range, and OZK is one of them. Most of the other banks have an efficiency ratio above 50%. So we can see some of these big banks like Wells Fargo has an efficiency ratio of 67%, which is actually quite inefficient, and Bank of America's efficiency ratio was close to 60%. So a bit about their founder, chairman and CEO, George Gleason. He is 65 years old, and he took over the bank in 1979 when he was just 25 years old. He holds a BA in economics from Hendrix College and did his graduate studies from University of Arkansas. And he has been a visionary, a very strong leader. I would encourage you to read the article published about him in the AMP magazine, which is the Arkansas Money and Politics magazine. And this has been a fairly comprehensive article on the bank as well as George. Just to share some of his quotes. In 2018 July, he mentioned, "You got to constantly strive to improve. I think that has been the key to my longevity as the CEO here. I have never been satisfied with what we have accomplished, and even with the best results, I have always believed we could do better. I tell people who work closely with me every day, if you want to work for the Bank of the Ozarks, you need to be willing to come to office and run up Mount Everest every day." Gleason adds, "However well we did something yesterday, we want to try to do it better today and even better tomorrow. It is a constant quest for improvement." It's this philosophy and his value system which really drove the bank from $28 million of assets to $23 billion of assets over a 40-year period. The net income and the net profit margins have grown steadily from 20% range in 2009 to around 35% currently, and we can see the revenue growth has been explosive. It has grown almost 6 times in the last 10 years. So this picture basically summarizes OZK's business model. It demonstrates the flywheel where OZK opens new branches or adds branches through their acquisitions. They maintain a very healthy efficiency ratio by controlling their overheads. OZK attracts deposits and they model 3-year loan projections ahead, and this projection is updated monthly. They adjust their mix and structure of their deposits based on need for capital. They focus on asset quality and return on capital, and their focus is not on growth. Their focus is on quality. They have one asset manager monitoring 14 loans on an average for the real estate group. They have very low net charge-off ratios and non-performing loan ratios, and they constantly and on an ongoing basis increase their dividends but reinvest the rest of capital, and they do not seem to prefer buybacks because they feel that they're better off growing their books. So that's how basically the business is run. Now, looking at their book value and the tangible book value, OZK just crossed a book value of $30. It's currently almost $31 per share, and their tangible book value is around $25. And the best part is the shares have been available at below their book value for a good part of this year. In fact, sometime back it was trading at around the tangible book value, which kind of acts as a floor. So we felt that was a great opportunity to accumulate some undervalued shares. So you can access the detailed research report by subscribing on moneywisesmart.com/research. It's available for download free, and our valuation of the business is also provided there. So this is our team. I'm Rupam on the left, and this is my partner Fan Liang. He lives in Melbourne, Australia, and I live in Singapore. And we work very closely in analyzing these businesses. We both like to take the deep dive and do a detailed research. We invite you to join us on our investment forum, which is this Facebook group. The link is provided here, and a clickable link is also provided below in the description section. So we keep discussing a lot of interesting businesses as well as many interesting investment concepts, and we invite you to come and join the discussion. And we would like to hear your inputs. I'm sure we might be missing important insights about some of these businesses, and it will be great to hear your inputs and insights on these. And if you have liked this video, do hit like and remember to subscribe to our channel. We keep posting a lot of interesting videos from time to time. And thank you very much for your time.